Hello everyone, I am Dr.A.NAGALAXMI, Assistant Professor, Department of Commerce with Finance in Dr. S.N.S. College of Arts and Science. I am here to give an explanation to a concept called as piecemeal distribution of cash. Piecemeal distribution of cash is a concept which comes in partnership accounting. When a partnership gets dissolved due to various reasons. So, it is a must for everyone to settle the amounts to the partnership. So, here we are going to see a concept called as piecemeal distribution. Piecemeal distribution of cash is concerned with systematically distribution of cash at the time of dissolution of partnership. Dissolution of partnership in it was assumed that the entire dissolution process is completed in a day, but it is not the truth. Yes, so settlement to the creditors, banks, or to any other for any other liability, and settlement to the capital of the partners, everything will not happen on a single day. That is the truth. But when we theoretically study in the partnership firm, we think that on the same day all the assets will be disposed, all the liabilities will be disposed, and all the settlements will be made on the same day. No, but it is not at all the truth. The dissolution of firm is a lengthy process. The assets are realized in stages or gradually. For example, if partner decides to dissolve a firm on 31st March, the stock may be sold off in April, the debtors may be collected in May, and the fixed assets may be sold in July. As and when money is received from the sale of assets, it is used to pay liabilities. The liabilities are also in stage or gradually. The liabilities has to be paid in stages or gradually. The money, in short, is distributed piecemeal in stages and not in a single shot. This is known as piecemeal distribution. See here, the example clearly states. So the assets, for example, there is a big building for the business. Is it easy or is it possible to sell on the same day? No, it may get postponed to some days. First, the person who is going to buy the building will put an agreement. He will pay an advance. He may take 6 months' time. So likewise, everything will take some times. So what are all happening in that is in some ways the the money will come inside the business. So with that amount something is to be settled. That is called as piecemeal. That is payment in stages, not in a single shot. Here there is an example. There is a clear piecemeal distribution at the time of dissolution of the firm. First, realization expenses, outstanding liabilities, partner's loan, and partner's capital will be settled at the last. Now we are going to see liabilities settlement. In a piecemeal distribution, the amounts realized from assets are used to settle the liabilities. In what order? Realization expenses is given first importance. Next, reserves for unrecorded and contingent liabilities is to be paid second. Third, outside liabilities is to be paid third. The preference is given for the partner's loan as fourth, and the last preference is given for partner's capital, that is surplus, if any, arising at the last stage, is distributed to all the partners in their profit sharing ratio. This is the stages. This is the importance given for the settlement of liabilities. The next one is, if the cash is insufficient to pay off all the dues, the payment is made to the concerned creditors in each category. The category what we see in the before, that is the earlier slide, proportionately in the ratio of outstanding balances. Partners loan. After all the outside liabilities are paid off, the internal liabilities, that is the partner's loan, are paid off in the next stage. If cash is insufficient, payment is made against all the partners' loan proportionately in the ratio of outstanding balances. The last is partners and capital. After all the outside as well as the internal liabilities are paid, the partners' capital are paid off in the last stage. Only in the last, the preference is kept for the settlement of partners' capital. If the cash is sufficient, all the liabilities can be paid off. But if the balance is insufficient, the payment must be made against all the capital accounts on pro rata or proportionate method. If the capital balance are in the profit sharing ratio, there is no problem at all. The payment is made to all the partners in the ratio of their capital balances. But if the capital are not in profit sharing ratio, payments at the each stage must be done in such a manner that the payment are in the ratio of balances of capital at each stage. The second one, the payment ensures that the ultimate profit or loss on realization is distributed among all the partners in their profit sharing ratio. So what they are telling us, if the capital is, if the profit is shared on the basis of capital ratio, profit sharing ratio, no problem. If they are sharing equally or on any other basis, then the payment are in the ratio of balances of capital at each stages will be settled. This is the concept called as piecemeal distribution. This is a concept called of piecemeal distribution of cash in case of dissolution of a partnership firm. Thank you. Thank you so much for your patience listening.